Good afternoon. This is Connor from 0DTE Traders here to present our market minute for November 18th, 2024. It is 12:30 and the SPX is trading higher, up 0.4% to 58.96. We did see a squeeze rally here this morning, retracing a good portion of Friday's risk-off move. It was bullish from the open, with mags outperforming, up about 1%, now up about 1.4%. We do have NVIDIA red today. It has been the underperformer, while Tesla up 7% on a net basis, and that's what we care about, positive the whole day. Second variable we were giving a lot of weight to is volatility. So clearly we saw that risk-off move on Friday. We saw that rebid in volatility. VIX moving up 21% or so from trough to peak, about 20%. Now, we did see volatility peak here off that 58.50 handle, which was an indication that vol sellers were stepping in. And today, vol sellers continue to step in, with vol crushing down about 8 or 9%, which most certainly has been fueling the upside. And this is what we were talking about in our market report this morning. There are going to be days where, even if this rotation trade continues, growth to value, where mega caps are going to be outperformers. So when we see any big move in mags, whether to the upside or to the downside, it tends to pull the SPX with it. And generally a good strategy is to align your trades in the direction of mega caps. Second was that volatility dynamic, as we mentioned. So with the VIX elevated, with volatility risk premium returning to neutral, there was fuel for an upside squeeze this week if traders began selling volatility. That's what we saw here today. There's still fuel, particularly short-term fuel, with volatility elevated for Thursday and Friday for NVIDIA earnings. So there is potential for further vol contraction later this week, which could fuel the upside. In terms of levels, we are essentially trading at that transition 58.95. You can see all strikes below negative. That is destabilizing for the market price. All strikes above positive. That is supportive for the market price. Now, a way to interpret this is that the options positioning is neutral at this juncture. Bulls nor the bears are in control. So we're kind of in a potential battle here. And we'll see who wins out today and in coming sessions. But if we can trade above that flip level, bulls will regain control and flows will start to be supportive once again, meaning dealers will buy dips, sell rips, creating that mean reversion, lower volatility. Conversely, below the flip, we would anticipate higher volatility, both implied and realized, as dealers sell weakness and buy strength. And this relationship is illustrated here in the return distribution. So zero line being the flip. When you're above the flip, you get a narrower return distribution. Below the flip, so that's a negative gamma, you get a wider return distribution. And it's not just on the downside. You also get some of the biggest rallies from a negative gamma state as well. We were discussing in our morning meeting today that the SPX likes to bear trap, meaning that it likes to have a hard 1 to 2 day down move followed by a sharp rebound. And we've seen this on many accounts, right? You get that one negative gamma bar. I mean, we've seen this so many times here, potentially here today. So sometimes it's 1 day, sometimes it's 2 days, as we kind of see in this zone. We see over here. Now, of course, this doesn't happen all the time. There are times where you actually transition, essentially see a regime change from positive to negative gamma. However, this is generally a setup we look for. And again, it's just mags outperformance and vol down. Now, our timing mechanism was on the 1 minute time frame. This is generally not the case. We tend to focus on the 5 minute. However, with the mags outperformance, there was decent probability we were going to see this trend get established in the early morning. So we were essentially just looking at our 1 minute cycle low with our DSS indicator and entering on those dips, which basically aligned here with this upsloping structure. Now, this is a very short-term structure, so not super significant. However, we did have structure as well as low of day as a good anchor point to play off of. Move is always back up into high a day, the first gamma level. This was the SPY flip. A break is a bullish indication where we would anticipate a move to the next gamma zone of 58.95, 5900. So that did reach our target, and we closed out into this move. In terms of option structure, it didn't really matter how you played it. Short puts, long call, bull call spread, upside butterfly. I mean, it was a very strong resolution. Now, I did opt personally here for a bull call spread, buying 58.90, selling 5900 for 250% ROI. And this is generally my preferred strategy, either that debit vertical or a single option, if I anticipate a trending type of day to get that asymmetry, that risk reward in my favor. And it's generally on lower volatility type of days where I will favor credit spreads. But again, whatever your preference is, the setup materialized and everyone made money today. If you'd like to learn 3 option strategies that our traders use to generate consistent profits with 0DTE options, along with a repeatable process on how to trade these strategies effectively, join the team at 0DTEtraders.com.